At this stage, it seems the markets are battling to find some form of direction. If you take a look at the US stocks, up 50% from the multi-year lows in March. Here in South Africa, July, for the month of July, we've gained 10%. What next? Where to from here? Because it seems no amount of good news is really faring well for the markets.
Well, if you take the year-to-date numbers into consideration, because I mean on a daily basis the market swings. You know, the market's slightly up and then slightly down. There's good news, it goes a little bit more up. If it's bad news, then well, you know, you end in slight negative territory. But we're moving structurally away from a time when markets are just down all the time. You know, so you get these massive movements down, -2, -3, -4% on a daily basis. So far year to date, and that includes the slump that we've had in the markets in March. I mean, markets are down. Markets are up by probably about 17%. We haven't seen the end of August yet. I mean, we're going into the last day for August, which is a massive recovery for the market if you take into consideration where the market actually was in October. I mean, October last year, you know, the World Inc. was going out of business. Things were looking really, really shabby. If you ask most people from a behavioral aspect, what do they see for the market in the next 12 months, and you asked them last year, October, they probably would have told you that things would be very bad. People would say, well, you know, the bear market's going to continue, and there's probably just going to be far more losses. There's probably going to be an emerging market crisis in banks as well, because there was a Western crisis in banks, and that just expounds the problem, and it just continues and continues. If you ask most of those people today, most people fence it. So people will say to you, well, you know, markets are up and we've made some money if you were in the markets. Or alternatively, you know, people are saying, well, you know what, there's going to be more bad news to come. And I think the bears are being worked out more and more out of the market as the market continues to gain. And that, again, the market shows that, you know, it's unpredictable in the short term. You know, if there's value in the market and you keep to a value tenant and you're prepared to buy stocks when things are cheap, then you buy and you hold for the long term.
Well, Cobie, as you mentioned, if you asked someone in October last year, it was all doom and gloom. But if you asked someone in 2006 where they thought the markets were going, I mean, we were busy enjoying a boom at that stage of the game, and no one really read the markets at that stage either.
Well, I mean, if you ask somebody in 2006, you say, okay, well, last 12 months markets are up. What do you see for the markets in the next 12 months? People would say, markets will go up. You know, markets will be fantastic, because people have a very short-term memory. People don't understand long-term data. People understand the very short-term. So people, if you ask people what do they think of the markets, people will take the last 12 months into consideration. Some people with very short-term memories maybe last 6, 7, 8 months into consideration, but people won't remember a previous crash. People won't remember that there's previous bad numbers that could potentially come out of a market. And I think you know, and that's the problem with a value tenant. If you hold true to buying value stock, is that if things are really bad and you try and look forward and you try and extrapolate the numbers, then everything looks like doom and gloom, and then you're inevitably not going to be buying.
October, historically a month where we do see a lot of downside in the markets. What are you expecting? Well,
this year has proven to be completely out of the ordinary, you know, because markets are trying to revert back to mean, or what we call averages. Given the earnings outlook and given where people think the world economy is at the moment. So it'll be interesting to see what happens this year relative to what has happened in previous years.
Well, just taking a look at some of the earnings that we've been seeing coming through on the South African front, really a mixed bag of earnings at this stage. But most of the companies that we've been seeing saying, you know, the second half is going to be bad. It's not going to be as good as people might think. And of course, people are expecting a real recovery on the earnings front. When you take a look at some of the outlooks there, are you not concerned that perhaps we're setting ourselves up for some kind of disappointment because we've priced in too much already?
Well, I mean, that is a great possibility. That, you know, come year end, companies say, well, you know, things are going to be bad for another 6 months or another 8 or 9 months. Because I mean, those are the two sets of data that you've got at the moment. You've got economic fundamentals that are seeing a bottoming out effect, and you've got earnings that continue to slump and slump and slump, because people are now thinking that'll potentially come to an end. That is the one thing that could potentially drive markets down further, is a slump in earnings, where companies come out next year and say, well, look, it's going to be tough for another 12 months, or maybe tough for, you know, tough for the foreseeable future. Then potentially markets will either move sideways, or you could potentially find a slump. And then, you know, obviously there, as an investor, you would want to see that you've got some form of cash. Remember, if you hold true to the value tenants, you would have bought stock, you would have now made money, and hence maybe you've got some extra cash available that you can deploy at those times again, you know, and buy the same companies, but, you know, at far more favorable
Cobie,
rates.
when do you expect fundamental factors to actually come into play?
Well, fundamentals are at play all the time.
It doesn't seem like it, though, right now. It seems like we're more of a sentiment-driven equity market. We obviously take cue from the likes of the US. If we get negative economic data from there, we know that it's going to spell doom for our trading day.
Look, you get to a point where fundamentals drive the market, where you have no more fear in the system. Whereas you don't have that at the moment. You've got a certain element of fear in the system. It continues to be in the system because people are looking for trouble around every bush. People are saying, could there be some stuff here and could there be some stuff there? And what haven't we seen that may, because they've just lived through a major catastrophe. So you've got the sentiment that continues to drive the market. At some point when you've got an uptick in earnings, when you've got this platform people are starting to work from again, and earnings are just continuing to compound out again, then people will start saying, well, okay, well, look, it's all more about fundamentals. Let's not worry too much about sentiment. And it's not a conscious decision. It's just something that happens in the markets. And then by virtue of that, then it becomes time to start being concerned about how long you actually want to hold stock
Exactly.
for.
How long should you be holding stock for? I mean, you're obviously a long-term investor here. When you say long-term, what exactly do you mean, and where is your exit point?
Probably the best time to own stock is when it's cheap, and the best holding period is probably forever. Okay, but alas, most human beings don't do that. They don't hold stock forever. Probably your best exit points on stocks is when the market becomes so frothy and it becomes so unbelievable that life just can't change, and things are just, you've got people that are so rosy and the proverbial hairdresser is telling you what stock you should be buying, then that's probably a good time that you should be trying to sell your stock.